Hello and welcome. You're watching Big Picture and I am Vishal Dahiya. Today we will talk about the big bank reforms. Now, half a century after the nationalisation of banks, the central government has now announced a mega plan to merge 10 public sector banks into 4 large entities. This will bring down the total number of public sector banks in the country up to 12 from 27 in 2017. Punjab National Bank, Oriental Bank of Commerce and United Bank of India will merge to become the second largest bank after SBI. Canara Bank and Syndicate Bank merger will create 5th largest lender of the country, and the merger of Union Bank, Andhra Bank and Corporation Bank will create 6th largest bank. Announcing this merger plan, Finance Minister Nirmala said that this will help in consolidating strong national presence and global reach of these banks. This was then followed by 55,000 crore rupees recapitalisation plan for the merged entities and 6 other banks, enabling them to enhance their lending capacity. So what are the salient features of the big bank merger plan and how will it help the banking sector and the economy overall? For more on this, we're joined by a distinguished panel of guests today. Let me start by introducing these guests to you, beginning with Mr. Pankaj Jain, the Additional Secretary in the Ministry of Finance, somebody who deals with this particular issue firsthand. We also have with us Mr. Shubhmoy Bhattacharya, Consulting Editor of the Business Standard, and Mr. Ramesh Singh also joins us from Mumbai on Skype. He is the former Executive Director of Dena Bank. Welcome all of you to Rajya Sabha TV studios. Let me begin with you, Mr. Jain, and let's start by breaking down things into simpler terms. First, what exactly is the mega merger plan and what are the different contours of this plan?
Right. So the mega merger plan really focuses on creating banks of scale which would enable India to meet its aspirations of a 5 trillion GDP economy. Now, if the economy is going to be of 5 trillion, you also need industry to be commensurate. You need people who will be entrepreneurial in that. When they do that, they are going to need credit. Now, if our banks continue to remain puny, they cannot fund these aspirations, because the way banking is structured and the prudential banking norms require that banks don't take too much of risk on a single company or a single entity. They take risk which is appropriate for their size. So therefore, as the economy will grow significantly in the next few years, you also need banks to keep pace. What has happened is, over the last few years, the economy has grown steadily. Bank reform has also happened steadily, but I think now is the time for transformative change, and this is what this entire thing represents.
Okay, if you look at the larger logic behind this consolidation, one is to ensure that there is more, the lending capacity of the banks is further consolidated, and that is why the recapitalization as well?
Well, that is, the lending capacity is one part of it. There is also this issue of, are the banks, do they have sufficient heft to be able to invest, let us say, in technology upgradation, in better customer service, in better customer connect, and in terms of fraud detection, for example. Now, all of these require investments. And the bigger the bank, the more ability it has to not only make these investments, but standardize those processes in a larger set of customer-facing entities.
Okay.
So that is what again makes a difference.
Okay, before I go to Shubhmoy and Ramesh, one more thing which a lot many viewers and general public at large would be interesting to know is, how did the government arrive at this particular combination of banks, merging A, B and C and not merging A, D and E?
Right. So again, the first core principle really has to be that customer disruption during and immediately after the merger process has to be minimal. Credit activity should not get disturbed. Therefore, the first parameter really is, are they on common core banking system? So is the software across the banks common? Now, when you do that, you realize that for some banks it was a no-brainer. You could straight away say that Canara and Syndicate were on similar softwares, what we call the iFlex software. If you look at Indian Bank and Allahabad, there were also another software called the Banks software. But you had 6 banks which were on a Finacle software. So within the Finacle software, you cannot really have 6 banks merging together as one, because that is extremely disruptive. But you could have broken this up into 3 and 3. So that's only one parameter, although that's an overriding parameter in some senses. We then look at the fact that each of these banks has a glorious tradition, rich history, a legacy of where they have worked. So, can you complement one with the other in terms of, let us say, what is their current capital availability, what is the level of their NPAs, what is the distribution of their branches. So, the synergies which can be unlocked, that becomes the second parameter which we have looked at.
Okay.
So, within these two, you then look at, okay, geographical presence, line of activity, extent of savings bank deposits, or what we call CASA deposits, current account and savings account deposits, those came into play.
Okay, so these are the rationale, and that is the logic. Shubhmoy, coming to you, how do you look at this, mega merger plan? Because this is very big indeed for the banking sector, coming after the nationalization, which happened almost half a century ago.
It is, it's big, there's no doubt. It's huge decision. The only thing that we had always been wanting is that probably it should have been a few years earlier. This plan has been in the works for quite some time, and Mr. Jain would know it far better than anybody. And we were just hoping that it'll happen, and people sort of kept on waiting. And good that it has happened now, but it would have been, as they say, gooder, or rather better if it had been happening a bit earlier. So that's one thing. But having said that, what Mr. Jain is saying, it makes it very clear that frankly there's very little to distinguish between these banks. These banks had actually, despite the names, the labels they carry, had sort of submerged all their differences into one common label, which was a public sector bank. You walked into one bank branch or another bank branch, and frankly speaking, excepting for the SBI group, there really was no difference in any bank.
Okay.
And that is not something which Indian customers should be facing. They should want competition, and that competition obviously was not happening. So there was no competition in terms of urging in deposits. There was no competition in terms of offering credit by offering interesting products. Banking sector across the world may be doing lots of stuff, but Indian banks, the public sector banks, were just happy to be just government owned and for the government to take the responsibility. So the very fact that the government has decided to merge them, and it just shows, and frankly speaking, the logic that is given is perfectly okay. That just shows that there is no particular reason to have kept these banks as separate entities. They just don't exist as separate entities for any major conceivable reason.
Okay.
So,
okay.
Yeah.
So that explains, why this decision is more important. Let me bring in Mr. Ramesh Singh as well from Mumbai, the former executive director of Dena Bank. Mr. Singh, how do you look at this particular decision taken by the government of a merger of these 10 banks?
In fact, after 1969, when the nationalisation was done, yesterday was the historic day, basically from the government point of view, when they declared merger of these 10 banks into 4, and so also leaving a few of the banks as maybe, though people are calling it a national bank or regional banks, is an historic. Reason being, if our economy has to grow to $5 trillion as we are going to be there in next 2-3 years time, we need to have very strong capital-based banks, and for that it was necessary for us to have some strong banks, and that is also good. When last year, in fact, I happened to be leading the bank at that point of time when mergers were announced for Bank of Baroda, Vijaya Bank, Dena Bank, and you could see in the first quarter itself after merging, Bank of Baroda for a consolidated profit of 710 crore has been reported, as against 7,000 plus crore loss reported by the bank last full year. So it definitely is a big thing to happen, which will bring quite a good synergy for the consumers as well as for the employees as well.
Okay. Okay, so clearly, there is a past instance as well of the merged bank performing well, as Mr. Singh is also pointing out. One next question to you, Mr. Jain, is the aspect wherein both the finance minister also pointed it out, and now you're also saying that the reason and the logic behind this was to ensure that the banks can be strengthened further, their presence can be, increased. How will this merger improve the performance metrics of these banks?
So, merger alone does not improve performance metrics in isolation. Any merger has to happen along with a package of other things. So, additional capital is the first such requirement. So, you make sure that you are adequately capitalized so that you can take those big lending bets. The other part of it is that reform has to go hand in hand, and there is a whole set of reforms which has been in place since last year, what we call the ease agenda. So, the ease agenda 1, ease agenda 2, on which individual banks are measured and a public scorecard is disclosed as to how these banks have been fared and what they have done. The third aspect of this is that you make sure that processes which are rolled out in one bank from the top go right down to every employee in that bank. Now, consolidation makes sure that there is common unified messaging and performance reviews which extend across a much larger cohort.
Okay. Shubhoy, how do you look at this, the performance of these banks being impacted, the merged banks, now the 4 entities which will now come up after the merger of these 10?
Well, one slightly concerning thing that's come up is that despite the merger of BOB, Dena Bank and Vijay Bank, their credit rate hasn't really improved. I mean, the rate of interest at which they are offering. So, that's not something that is very great. But the markets have looked at in terms of the market capitalization, and that has definitely improved. So, these are the two different metrics that have happened. But when we look at these banks, one of the things that we want to look at is that these banks have frankly different levels of not just profitability, but also in terms of their ability to handle difficult loans. And now the critical thing that we would want to see is, and that is where the big question would come in into all these mergers, is how is the management structured in this bank? For instance, if it is made on that seniority will be the determinant to determine who is the CEO, or the people who are there need, I mean, the bank books will be looked at only in terms, I mean, that will be looked at in terms of where they stand rather than what needs to be done. That will become very important. One of the critical things is the thing which with the finance minister said yesterday is about the bank board, composition of the board, and lots of work has been given to the boards in terms of creating a new synergy. Now, how this board structure is created would be very important to determine for the markets and to get a confidence that these banks really mean business. They are not just small bank getting in. I mean, it's not a bad bank, and so therefore there were 4 bad banks, they become 1 bad bank. That shouldn't be the idea.
That should be the case.
That's very important. I'm not even getting in the issue of how the salary structure and others would be looked at, because some of them are under the industry-wide things, and some banks among them have been asking that their salary structure should be determined separately. There were some demands. So I'm not even getting into that. But from the customer's point of view, is it just a conglomeration of bad banks, or is it that these banks have a synergy? And in that context, one of the things I would like to see is the selection of the CEO. It will need, typically in public sector, banks, CEOs come and CEOs go, even if they have a long term. But say the way the name of a CEO of a private sector bank, that does not occur in the public sector bank, excepting for State Bank of India.
So impactful.
And that presence of that person does create impact in terms of the banking structure. And because bank is essentially, I mean, a lot of its capital is the human resource. And how the CEO comes in, who's made, and what is the choices made. I think these will be very critical issues to see as in the days going ahead.
Okay, Mr. Jain, how do you respond to this? Because these are quite a lot of suggestions, and these look like very important ones out there.
Absolutely, and I think it's a valid point. In fact, if one goes back, the very fact that in 2014-15, for certain banks, CEOs were, the positions were opened up to the market, and that is how we got some people there. Even now, for 4 banks, the bank's board bureau has actually advertised, and we've invited applications from the market. Of those, Punjab National Bank is definitely one of them, where we are looking forward to recruiting somebody from the market. So, I think the concern that it is simply going by seniority, I think that should be addressed here, right up here. That is not something. I think government is fully conscious of the fact that leadership in the merged entity is going to be absolutely vital to deliver the outcomes which were thought of, which were envisaged. 1. 2, to simultaneously give greater powers to the board to actually drive decision making, to review it, to have oversight, which, as the finance minister has announced, have been a series of steps right down to be able to have a much stronger risk function within the bank, to get in somebody from outside, in terms of being able to get the best talent as non-official directors on the board. I think all these are changes which have to be seen in tandem with the aspiration to have banks which are of size which matter.
Okay, that's wonderful. Quite a lot of follow-up steps as well out there being thought out by the government. Let's bring in Mr. Singh back here again from Mumbai. Mr. Singh, from your perspective, as far as the performance metrics of these merged entities are concerned, how do you look at the future for these merged entities, the 4 which have come out of the 10 banks?
In fact, initial teething problems are always there for any merged entity, as could have been market has been speaking about the Bank of Baroda, Dena Bank and Vijaya Bank merger. But immediately in the first quarter itself, the market could see Bank of Baroda has shown better results. They have shown credit growth as well of 6% as well. It should be taken as very commendable, particularly when there is an economic slowdowns are happening. Still 6% growth by Bank of Baroda is commendable. For the future 4 banks which are going to be merged maybe within next 6 months time, because last year when this had happened, the 1st April date was fixed, and this also is going to be probably 1st April 2020. And by before that, these 4 banks which are going to be in existence, these banks management will definitely meet together, sort out the plan of action, blueprints will be prepared, how to go about it will be there. And the market perception, particularly since yesterday, there has been even today, people have been crying once the merger is going to take place, the credit offtake will get slowed down in these banks. It's not so. Particularly last year, it did happen with Dena Bank, because Dena Bank was already under PCA, and that's why there were certain issues with them. But Vijaya Bank and the Bank of Baroda were fully allowed to lend, and they were doing so. So even these banks which are going to get merged now in these 10 banks, they will ensure that the customers are not put to inconvenience, and they become the part of the growth story of our country, and they play a positive role. And top management, they have learned a lot from which are there, because we are all in the industry. We keep on talking to each other. And last year when these things were happening, many the then MDs of those 3 banks, Mr. Jayakumar, Mr. Shankar, and so also our Dena Bank, Mr. Karnam Shekhar, they were meeting other people as well, and they were sitting together to find out the challenges which are going to be happening and how to come out of it. So naturally, from the business perspective, the performance metrics, certainly maybe initially it may be seen that there may be some downfall, but within 12 months to time, you will be seeing the great results from these entities.
Okay, so it might take time, but the results will definitely start showing. One most important aspect of this entire process, Mr. Jain, which has been pointed out, and you also begin with saying that as to, this is a step towards achieving that target of $5 trillion economy. So how will this mega merger impact the Indian economy on the larger scale as a whole? What impacts will we see in terms of more lending, in terms of the presence of these banks becoming stronger, but on economy specifically?
So let's see, banks perform a certain role of what we call intermediation, which means that they can take savings from people like you and me and make it available for investments. I think that is the key role. What for any economic growth to happen, credit or capital both matter. So capital in terms of equity and credit in terms of debt. Now what we have seen is, in the past, when you wanted to set up a huge project, you would have to go and knock the doors at about 25 or 30 banks, which meant that the consortium itself became unwieldy, decisions would never get taken. And the reason for that was every bank felt that they did not have the ability to fund this project on their own in a significant way. So I could just take 2%, I would take 1%. Now what this does is, at the big industry level, you can take up big projects, but simultaneously you can start bringing in best in class service for individuals. So for instance, what we have seen after the merger in consolidation SBI, if you see the kind of traction which the YONO app got in terms of people not having to use debit cards, people doing everything on their mobile. Now, if SBI had been a small bank, would they have been able to make that kind of investment into something which is customer facing? So, the idea really is that can you do both simultaneously, because you need to do it. You need to spend much more effort, much more energy in terms of getting to your ultimate retail customer.
Okay.
And at the same time, making sure that industry which will eventually create jobs does not get served of credit.
Okay, so that is where stronger banks are required. Chumoy?
Yeah, one of the things that one wonders is that obviously, as you're saying, the Indian economy is has good ambitions and stuff. Is there any idea about now when we are going to have these big banks and the outline is more or less clear about which are really the big entities, about how they will look at the foreign markets? I mean, are we looking at in terms of division, sort of, approach that some of the banks will go to the European market, some will go to the African market and all that sort of stuff? That's something that everybody would be very keen to know. And probably it might be a good idea to, start looking at a business policy right now for these banks when, right at the beginning, to, look at which part of the world that they'll be looking to target, what sort of products that they'll be targeting. That'll probably create interesting efficiencies for these banks, because everybody doing everything could lead us again to a situation where the banks are essentially doing the same thing to each other and there isn't anything much to differentiate. That's one. And of course, the other issue is, I think Mr. Jain wouldn't want to talk about is there any possibility about going below the 51% threshold?
Well, that's quite an important one out there, Mr. Jain.
So, right now the law is what it is. The law says very clearly that insofar as public sector banks are concerned, government will not go down below 51%.
Okay, so that clearly answers your question, Shubhoy, that as of now, the banks, the government equity will not go below 51%. But in terms of overall, the banking sector reforms, which we have been talking about for quite some time now, this is a big step. And we have almost looked at all aspects of this. But looking at the future, in terms of the continuing reforms process in the banking sector, what all is which is on the table or which is on the cards as far as the government is concerned?
Look, the reform process is something which is always going to be ongoing. We are never going to be able to say that we have reached there, we have done, and it's something where you're all the time you have to be on top of it and say that we are always ready for next, whatever it takes. Insofar as consolidation is concerned, we would expect that after this, we would be pretty much in steady state. And the banks, which are about 8 of them, the 4 merged one, the 4 new consolidated ones, BOB, SBI, BOI, and so these 8 banks really are not just national banks. They are the ones who will also have global aspirations, global reach. Remember, they have a legacy again of branches overseas. So BOB, BOI, SBI actually have a large number of branches overseas, and we underwent a very rigorous exercise of rationalization with the banks concerned in terms of making sure that they don't compete with each other. So in some senses, what one is looking at is product innovation, continuous reform, investments in technologies, better back-end processes, and reducing turnaround time. I think these are 5 things which will continue to happen with all these banks.
Okay, so there it is clearly as pointed out by Mr. Jain and the other 2 panelists also, that this is the why and how of the mega big bank merger plan, that is the consolidation plan, and how the government wants to take it further as well. We thank our guests and we'll come back again on Monday with a different topic and different set of guests. Till then, keep watching Rajyasabha Television.